guys. Thanks so much for being here. Drew, I want to start with you. So it's interesting to me, the market kind of turned on the housing data this morning. Now it's turned a little bit again, but not to the degree that it was heading into the pre-market today. What does that tell you about what the market is kind of trading on right now and the amount of conviction in the market?
Honestly, I think we're starting to price out the recession tail risk right now. Even if we have economic growth slowing in the next couple of quarters, I think the market's comfortable that we're potentially not going into a really deep and prolonged recession. So I think even for some of the consumer stocks that didn't really have great earnings, the market and investors are looking through that to the other side, and then balance that with, Fed cuts seem very imminent, and that's been really good for the growth side of the market. So again, markets looking through some of the softness, they're pricing out recession risk. I think that's really healthy, and we have a much more balanced setup from here.
What do you think, Chris? Do you agree?
Yeah, I do. When you look at the data that we're getting, it seems to indicate more of a soft landing. We've been bouncing back and forth between, fears of a recession, given some of the early July data that we got. And then yesterday, kind of a snapback. The economy's okay, the consumer's okay, even though I have some concerns with that July retail sales figure. But overall, it's kind of supporting the soft landing narrative that the Fed has really been targeting. And I totally agree that, we are that much closer to rate cuts, and we're starting to look through what are the implications of that as we not just get a first rate cut, but really as the Fed enters what is likely to be a rate cutting cycle. And the market, as we all know, looks, 6 to 9 months ahead. So folks are starting to say, what does that mean 2-3 quarters out?
Chris, what are your concerns around the retail sales data that we got yesterday?
So if we take a look at some of the events that happened during the month of July, Amazon's, Prime Day and competing efforts, Walmart, Target, I'm just a little concerned that we saw some pull forward from August and the back to school shopping season, just given the really robust numbers reported by Amazon, that when we get the August retail sales number, instead of seeing a month over month increase like we historically we might actually see a negative number, and that can lead to some further incremental downward revisions for GDP expectations for the current quarter.
We're going to get to both of your kind of post-pullback shopping lists. Drew, I stole that from you. But just to get one more inflation question for you in, I know that you've got a house call of 125 basis points of cuts and that recession is not in your base case. You mentioned that earlier, too. I'm not going to question your colleagues on the econ desk, but what questions does that call prompt from clients just about how to position for that degree of cuts without a view of a bigger economic concern?
This is always a tough one because some people think you need the economic weakness to get the cuts. And again, the soft landing or no landing narrative is really inflation's come in. So when we talk about positioning, we still like barbelling, but because we don't think we are going into an earnings recession, again, not to talk about our econ colleagues and their view of the world, but if earnings are resilient on the growth side of the market, we want to buy that for defense. And we want to barbell that with cyclicals and the rate sensitive cyclicals like financials and consumer, which should benefit out the other side. So it's basically anything but defensives. And that's honestly been our stance for most of the year.
So Drew, what does that tell us then just about positioning? Because you correctly called the pullback that you had been expecting in AI stocks. We certainly saw that. Now here we are today, and we certainly have seen a bounce back. Many investors out there buying the dip that we had seen over the last 2 weeks. How do you think they're positioned today? And what does that then tell us about that further positioning for investors?
Well, breaking news from our team as our updated weekly sentiment index just hit, and that just came back to neutral. So with the market pullback, especially the more aggressive pullback on the growth side of the market, sentiment looks much more balanced now than it did heading into this month. So that's number one. And then number two, like talking about the growth side of the market and AI stocks and our view there, because those have come in more aggressively, you're starting to see implicit growth expectations that actually look much more attainable now. So you can start legging into some of these names like an Apple, an Amazon, an AMD, or even a Marvell. So again, much more balanced setup, growth side looking incrementally more attractive here.
Chris, 30 seconds here. You also bought Marvell on the dip. Why is that your chip stocks pick?
It's real simply, we're starting to see the upgrade cycle for PCs and smartphones that are going to drive a AI-enabled explosion in content creation consumption. That's going to pressure the digital infrastructure, which is the other side of Marvell's business outside of data center, which is already benefiting from strong spending from big tech. So we see all of Marvell's businesses strengthening into 2025.
All right, Chris Versace, always great to get your insight. Drew Pettit, we really appreciate you taking the time. Thanks to you both here for breaking down the latest moves that we've been seeing in the market.